How many different developments can you do?
How do we make a dollar? Where does the profit in land development actually come from?
Do you ever flip the land off, or do you every single deal see it from A to Z through the whole horizontal development process?
Some of them do attend some of the city council meetings just to support the project.
What is the single biggest factor that determines whether a development project like this is successful and profitable?
If you do not have your option contract set up correctly and where you can't extend and you're out of options and you do not want to close.
Why do five-star school districts dictate how high of a demand is? We're building lots of businesses. We're obviously in this country, largest transfers of wealth. Baby boomers just coming of age. If you buy a business and you have
So welcome back to the KB podcast. My name's Kylie Brown. I have two of my colleagues on here, Daniel Patrick and Andrew Clements. Hey guys, how you doing today?
Pretty good, man. Thanks for having us.
No, not a problem. So thanks for being on. Last week we went over basically why it's important for, us as the developers to make money. But today we're going to go over how land developers actually make projects profitable. So why do most investors assume the money in real estate development comes from appreciation alone? I think that kind of stems from the multifamily side, but that's what we're going to jump into today, guys. So to start it out, Daniel, I knew you had a couple questions when we were speaking a little bit ago.
Yeah. And, I know a lot. And I think, some of the things that I want to ask you today are more so just from questions that I get when I'm on the phone with potential investors. They want to know, like, obviously, they like to see a compelling return. They like to have the structure. All of us know here that investors are definitely buying the people and not the business. But as they do their due diligence, I mean, they want to know, it's like, okay, how are you guys actually making money? Because I feel like these horror stories that you hear about, and I hate using that term, but I feel like those unsavory experiences, the reason that they're so prevalent is because it's easy to raise money. It's easy to run a Facebook ad. You can have a well-articulated person on camera talking about how great they are, the market share, the market insights, blah, blah, blah. But then they don't know that they're not good stewards of investors' money, and they don't end up making a profit with the money that they've invested. And that ends up with an investor who's stuck holding the bag for a lot longer than they thought the maturity date was going to be. So,
well, I know, but when you're speaking about that, though, before you jump into that next part, you got to understand what investment are the investors getting into. Because, like, guys, just with the development, how many different developments can you do? You can do obviously retail, you can do commercial, you can do residential, which our specialty is residential development. So with each one of them, there's different criteria that you want to focus in on. And honestly, that's where I started was retail. I used to develop for like Walgreens, Dollar Tree, and all them. Totally different criteria, and I had to follow what they wanted. Versus now in single family or even multifamily, you can build wherever you want. You just got to make sure that, and we'll get into this a little bit more in depth, but your absorption rate is there.
Got it. Yeah, absorption rate meaning like the speed in which these things are bought up. And so for us, Kylie, I mean, how do we make a dollar? Where does the profit in land development actually come from? Because I know there's, it's not just the profits on the back end. I know with our structure, we have some money that's made upstream even by the time we close. So could you expand on that? Like what areas do we make the dollar?
Everybody says all the money's made in the purchase. Now, that is true in a lot of different real estate industries, and it is true in ours as well to an extent. But you want to buy the land, obviously as cheap as possible. But with that being stated, we can actually way overpay. Just depends on what we're trying to do there versus what someone's asking for the money. But that's based on a lot of criteria, where it's at, what the absorption rate is, how much we're going to sell those homes for, or how much we can make on the entitlement process. So first step is entitlements. Get the land under contract, get it entitled. That entitlement process usually takes on average about 12 months, depends on jurisdiction. There's a lot of money to be made just in that. So you can flip the contract if you got the land cheap enough, quick flip. Fair enough. But if you get it entitled, that piece of land can be worth anywhere between 20% to 200, 300, 400% more just in value. Depends on the piece of land where it's at, just with entitlements. So that's step number one.
And I guess to further kind of expand on that, do you ever flip the land off, or do you every single deal see it from A to Z through the whole horizontal development process?
Usually I see it all the way through. I do have one piece of land. I think I mentioned this to you guys that I might flip. It's just because I'll make about $400,000 onto it, and I haven't, really done much to it. So it'd be worth the flip. I've had it for a couple of years and it's a good parcel, but if I can make quick $400,000 and I don't have to do no work, why not?
And I guess, another kind of question to talk about the profitability piece of all of this. Do you look at the profitability in stages as the phases are completed and go through? Or is it like the profit at the end of the day, this is what you're making on that project in its entirety? Like, how do you break that down and look at it?
No, that's a great question. So it depends on what you're trying to do. So, like, if you're new to development, and this, this is for someone that's just getting into development, you might want to flip it out early. You're in the initial phases, you're in the entitlements, and there's a lot of people that start out this way. They just go through entitlements. They option the land, they put it in, go through the entitlements, and then they flip the contract. A lot of them are not good at it because they don't have a back end buyer in place. You want to have that in place. Like, that's always been crucial to me. I want to have that in place before I have the land under contract. Like 5 different positions you could exit at the initial buying it and just flip it. You could exit at entitlements. You could exit at horizontal construction. You could exit at pre-building some of the homes or final sales. There's a lot of different positions to exit on a project. Just depends on how far you want to take it along and what kind of capital and risk you want to be associated with that.
And I think just going through the nuts and bolts of where all of these different places that money is created in our deals, I think that ties into a good question that I had before we got started today, and that's, why is land development often misunderstood compared to traditional real estate investing? And I think just going back to what you were saying, Kylie, there's all sorts of different ways to invest in real estate. But I think when most people think of real estate, they don't think of land development. They think of, multifamily, where you mostly just make your money on the back end. You don't get paid just for fixing up the building. We're building equity into these projects at the time of closing because we've already done the entitlements. The only time that we don't make money with entitlements is if, we're buying land from, a land bank, for example, that's already done the entitlements. But with that, Kylie, just a quick question, because I know we've got a project or several projects coming up in the Florida Panhandle. Most, if not all of those projects are already entitled. Is that an accurate statement?
Yes and no. So St. Joe Paper Company, they do take it through the certain entitlements, don't have to get it re-entitled, meaning, you have to get it reapproved slightly. It's already been entitled, it's already approved, but if you're not building 20-foot wide townhomes and you're building 24-foot because you want to do 2-car garages, you'll have to get that reapproved. It's not a big process, but because they already approved 120 on that Freeport one that we talked about, but it does take a little bit of time. You're looking at another 3 to 5 months.
Yeah. And with that, in a normal entitlement process, like, what is the developer actually doing when they take raw land and turn it into a buildable community? I guess, today's discussion is more about the infrastructure and how we create money. So, like, what actually has to be done? Because I know it depends. Sometimes there's amenities, sometimes there's not. But I know we've got to build roads. There's all sorts of things that we got to do that are anywhere from 6 to 15 feet underground. Like, what exactly does that even entail?
Yeah. So, I mean, when you're first looking at a piece of land, you do got to do a lot of initial entitlement due diligence work. So that's why we option the contracts. We don't, buy it just the raw land right off the bat because there's things that you run into, rock here in Missouri, sand, obviously in Florida. You're going to have a ton of sand and you got to make sure your compaction is correct in both areas. But, there's a lot of things you want to find out. So through the entitlement process, you should figure a lot of that out and figure out whether it's a viable deal or not. So that is one of our make or break points. And I apologize. What was your main question there, though?
So I guess, what are the main steps that transform land into something builders want to buy?
So once you've already done your due diligence, all of your geo work's good, surveys are good and everything else, you got to kind of look more into, and we do this ahead of time before we even put the land under contract. It's more of the absorption rate. What do the schools look like? For us, this is residential, single family homes. It's not commercial. It's not retail. It's completely different. But with residential, you have all that other stuff that follows. Or a lot of times it's vice versa, where you'll have something big commercial that goes in. Like, for example, Serenity Woods over in Wright City. There's a big meat factory that just went in that employed 2,000 people. We know that those people had to have a place to live, and we're better to live than at one of our subdivisions. So that one we did sell off Fisher Homes, but there's 127 homes over there. That could, be at least 250 to 300 people that live there just in that one subdivision. So we kind of look for things like that. But usually it's an A-rated, schools. That's our first and foremost, just because we know those are going to sell. And especially in the Missouri market, nothing like the Florida market. So if you're trying to compare us to the Florida market, there's no comparison there. Florida market has high highs and low lows. We're pretty much just like this all the way across.
And on average, and I know this is kind of a wild question because I know the answer to this is that it depends, but typically, how long does it take to move from raw land to builder ready lots? And I guess what sort of variables dictate the length of that process?
2 years is about time frame.
Okay, awesome. I mean, even when we have to deal, like, let's just say we have to deal with like a room full of people at a city council meeting and people are throwing wrenches in left and right. I mean, can that extend the process? I mean, what sort of things could take that 2-year process and make it go longer? I mean, is there something specific that's came up for you where you thought it would take 2 years and then it took 2.5, maybe 3 years?
Yeah, so time you start looking, get something optioned under contract, that usually takes a few months just in that process. That's probably 2 to 4 months right there alone. So that, starts the process. After that, you go through the entitlement process, which here in Missouri on average is about 12 to 15 months. Chesterfield took me 21 months, but that's because the jurisdiction, it just really depends where you're at. There's other things in Florida we could do in 3 months. They're already entitled, they're ready to go, and we can start breaking ground. For us to make profit, though, we have to get it to a certain point. You can't just go in. For us, and I shouldn't say you can't because I just went over the 5 different ways of getting out of a property, but we're not ones to get in and just flip it right after entitlements. We want to go through the process. Now, if we think the market's changing, we might go ahead and sell it off right after entitlements to handle the horizontal. It just depends on where we think the market's going. Right now, I don't have much fear in the market. Obviously, there is a lot of people that do have fear in the market for great reasons. It's very unknown, but right now I feel pretty confident about where we're headed. So
Awesome.
I'll jump in here as well. What is the single biggest factor that determines whether a development project like this is successful and profitable?
the number one factor,
Yeah,
if it sells. But no, so
sure.
seriously, on a serious note, honestly, find great locations, 5-star schools. That's like first and foremost for us. Now, that isn't just the end all be all, but if you're in a solid, like the Midwest right here in Missouri, we don't have much fluctuation. So our lows are very minimal, and our highs are very minimal as well. We don't go fluctuate too much at all. But you got to find land that people where they want to move, where do they want to be at, and do your numbers make sense? Okay, if you're only making 10% gross margin, does that make sense to go do that high-end project? Probably not, because there's too much risk. If you're making 35, 40, 45% just on, the horizontal side or just entitlements, absolutely. I do that all day long. So you gotta weigh in the risks, and depends on what you're trying to accomplish and where you're trying to exit at on how you're gonna make the money.
And do you find in that entitlement phase, because obviously it can take anywhere between 6 to 18 months, sometimes even longer, do you find that like the land can get more valuable, less valuable in that time frame? Do you have to like renegotiate the deal, based on that, if that makes sense?
Great question. So, the land doesn't usually depreciate in value, but the way it can depreciate. So, for example, one we're working on, Lake Powell down in Florida. It's in Walton County. I forgot the number, but I think we have it under contract for 2.75 million. There was something that just popped up where we found out there is a 200-foot variance where we can't build within 200 feet of Lake Powell, and we went from 40 units down to 25. The seller is meeting with the engineer today, actually. I won't mention their names because then it'll be hammered with calls and stuff. We're meeting over there today to figure out if the density can be increased, because if it can't, they can't sell it to me for 2.75 million. I can't pay that for it because I just lost, what is that, 33% of the amount of homes. So my cost in my land has to drop by give or take 25, 30%, maybe 33% would be nice. I'm not going to try to push them that far because we do have a little bit of value built in already, but it'd be nice to be able to reduce it by 25, 30%. And that was just an unknown. Nobody knew about that. And that just popped up with a title search.
Yeah, so I mean that kind of leads into my next question, Dan, if you don't mind. I think what you explained is like incredibly interesting. I would imagine that the further you get into things in some of these projects, some of these entitlements, there's going to be more bad things that come about. But how would you weigh that, right? Is it more bad that comes up? Do you ever find that maybe you can actually get more lots out of a certain property? Can you then renegotiate through that process? Is it always a constant renegotiation as you're moving through the process? And how does that work? Because you kind of outlined it with that project. Is that a constant?
Actually, these are great questions, Andrew. So, like, the one we're doing right here on Manchester, right here in Wildwood, Missouri, right across from Schnooks. Yeah, it's 12.8 acres, 12.1 acres, whatever it is, 12 acres, give or take. I always go super high. I always tell them, hey, listen, if I can't achieve this, then I need a reduction in price. So on that one, I said, hey, if we can't achieve at least 50 units, I need to reduce. I forgot what the number was. It was like $48,000 per house that I lose. Well, it actually turned out better than I thought, because I thought they were going to come back with 30. So we were going to have the price a lot less, but I always started out high because you can't usually go in and ask for something lower. If you already gave a low offer, you might have a hard time getting accepted. So I usually start out real high on, okay, we'll give you close to asking, but if X, Y, and Z are not met because this is what you guys think it will achieve, then this is why we're going to reduce the price. So right now, I think we're at 2.1 million on that piece of land. We're going to drop it by 8 units because we only got 42 versus the 50. So that will drop the price by whatever it is, another 400,000, give or take. So we'll probably be closer to that, 1.7 million versus the 2.1 million. So that does happen as well. But here's the thing is, You don't usually get that with sellers that are fresh on the market, that know what their property's worth or know where the value is. This one was only zoned for commercial. We're doing residential. The city loves it, and they love the villa product. So this seller knows that this is probably their only option to sell it in the next 10, 15 years and receive any value out of it. Why they're alive, unfortunately.
And does the seller take on any of that entitlement cost? Like, it seems like you're doing a lot of the legwork to get it through the process, and obviously there's like a dollar sign kind of attached to it on the back end. But how involved is the seller in this process financially?
Financially, not really at all. Physically, not really much at all either. Some of them do attend some of the city council meetings just to support the project, which was great over on one of our Bates projects. But they'll support it, and then they have to provide any documentation or sign off on anything that we need done. So they do have to be part of that, and at least be willing to sign off and coordinate on that side of it. So great question.
Do you find that some of these sellers are trying to take advantage of the situation where maybe they then, had land that was, zoned a certain way and now they've got it, through all of your hard work zoned for X, Y, Z amount of, residential lots. And then they're like, "Yeah, actually, you know what? I'm going to then try and bring it out to the market." Or do you find that you can lock these people in?
Another great question. So great question. So if you do not have your option contract set up correctly and where you can't extend and you're out of options and you do not want to close, you kind of are SOL at that point. That it's a horrible position to be in. So you've done all the work, you've put in, let's say $100,000, $200,000, whatever the number is, and now you don't have enough money to close on it, or you don't have enough time to find a buyer on the back end. That's a horrible position to be in because you took that land from, let's say, commercial or agricultural, and you got it zoned for residential. So now the value doesn't mean from commercial to residential that's a lot more valuable, but in this case it is because you can only build one-story homes over there or one-story buildings. So it is a lot more valuable. A lot more valuable. We could take those 50 homes and sell it and make, I don't know what the exact number is off the top of my head, but $4 or $5 million just on those 42 homes that we're building.
Yeah. Yeah. So the answer is in the option contract, right? And
Oh,
you're
absolutely. Yep.
okay.
So that's great question. But most sellers will work with you. But there are those ones like, well, it was only worth 2.1, but you just did this X, Y, and Z. So now I sell for 2.6. That can easily happen. It's rare, but you guys know not every person is just honest and will do what's right. So
You mean they're not all not honest and that do what's right? That's crazy. Can't even understand that. It does surprise me. Like, I think a lot of people, they hold people, especially like when you see people online, for some reason it produces some sort of Hollywood effect where it's like, oh, well, this person wouldn't be here running ads on Facebook if they weren't just a fantastic human being, especially what they're saying. And it makes sense and it resonates with me. I am shocked about the stuff that I hear about. Going back to some of Andrew's questions, which were awesome, by the way, Andrew, but one thing that came up for me is, I mean, is there ever a situation where after you get the entitlements, after you get an approval from the city, that you discover you can actually fit more lots on a job than what you previously anticipated? Has that happened? Can that happen? Yeah, I'm curious. And if so, like, what would that process look like? Would we even want to go through the trouble of going back to the city and say, hey, by the way, we want to build another 20 lots here? Does that even come up ever?
yes and no. So I always try to get the most amount of lots right off the rip. So yeah, we're trying to max it out right off the bat. So usually what happens is like even Serenity Woods, we were trying to get 176. We got, what was it, 133. And the only reason why we reduced it to 127 is because Fisher wanted to build some bigger lots. So great question on that end, but like it's always the exact opposite. Like if we can get more, we probably would. But here's the thing, guys. Like I'm not a developer that just likes, there are a lot of developers like this, won't mention any names, but a lot of the top home builders even, they're trying to pack as many homes as close as they can. I don't build like that. And I've talked about this numerous times, but there's a difference between a house. A house is just a building that you could go stay in, and a home somewhere where you generate memories with your kids and your wife and everything else, or spouse. So somewhere that you actually grow up and you love where you're at. So like we don't try to pack our residential communities like that at all. So I do that first off for value, but also a lot of the stuff that we're building is kind of in my purview where it's close by, and I'm like, I want to say, hey, we built that. But back to what you were saying a minute ago, I don't know what your point was on all the way, but a lot of those other companies, like I know there's one out there called 10X, right? That's their whole logo. They don't 10X your money. So, like what is their average return? I think 4 or 5%.
Yeah.
Is that
Yeah.
more close to what they're receiving? And they advertise more than anybody out there. And I'm not sitting here and hammering on that, whatever. If you're happy with 4 or 5%, cool. But there's other ways of investing your money. But just because they put the most amount of money in marketing, their name is all over the place. 10X, 10X, 10, and he's going to, brand himself. That's awesome. I respect that 100% and all kudos to him. But our goal, right now is just bringing solid people, understand exactly what we do. They make a lot bigger returns, but it's on what we do with quality versus just quantity.
Yeah.
Let me jump in just to kind of like keep going off of this concept, right? It seems like there's a lot of negotiation that happens, obviously from point A to, closing, right? So, how agreeable and amendable is Fisher within the process to, the sliding scale of the lot price as, because obviously you want 175 lots, but then it comes down to 133, that's a massive difference on our end as, as far as the profitability goes. So how do you manage that throughout the process to arrive at, reverse engineering and still getting all of the numbers to make sense internally for the company?
So usually I used to present it right off the bat. And you guys knew this a little bit more, but I would get a contract with one of the national builders right off the rip. So like within 30, 60 days. I don't always do that now. I still can, but I usually want to have a lot of my horizontal construction budget in place, which usually takes about 90 days now. So I don't get a contract with one of the national builders until I have that horizontal construction, which usually we're within 5%. Before we'd have to adjust the contracts too much and it didn't make sense. I'd have to go back and renegotiate. And that was just too stressful, honestly. So the way we do it now, we're pretty close. And if I do have something that comes awry, most of the national builders, guess how they make money?
Selling the houses.
Build homes and sell on homes. So if they don't have lots, and there are some of them here locally, they just don't have enough lots. They probably won't be able to stay here in this local market. If you don't have lots, you don't have nothing. So me trying to sell them for let's say 85,000, but I'm say, hey, listen, Mr. X Homes, whatever you are, we need 95,000. Does that kill their bottom line? Can they sell it for the extra $10,000? Most of the time, the answer is yes. Just depends on the market and schools district, absorption rate. There's a bunch there, but yeah, they don't usually have a hard time changing that number to make my numbers work for me.
And I know that, these builders, they make their money by building houses and selling houses. But why? I mean, we make a lot of money upstream. Why don't, like, what is the reason, at least, in the case of Fisher, because I know a lot of the work that we do is with them. I mean, what was their particular reason for not wanting to have to acquire the land and doing the land entitlements? Like, why would they just pay us when, realistically they could do it themselves? I know it'd be more work, but why do they have us handle that and not just do it themselves as a massive $1 billion company?
Yeah, so there's numerous reasons. They do have a whole division. So Fisher Homes individually has a division called GCL, Grand Communities Limited. They're great at what they do, but they're not stationed here in Missouri. So to get that whole horizontal side done, first off, they have a ton of holding costs. They do not want to be holding lots. They do have a division. It's called land banking. It's not nothing to do with Fisher, but they have a company that they work with. I think it's either 12 or 14% flat rate. So just holding the land, they'll pay you 12 to 14% just for holding lots for them. But there's companies like us that go in and develop it for because they don't want nothing to do with the development either. They just want to be able to go in and build homes. That's their specialty. But the problem with that, there's a huge problem with that, in my opinion, is if you don't have lots, guess what else you don't have? Homes. And without homes, you don't have profit. So if you don't control your inventory, I think it's super dangerous. So I think it's important, for companies like Fisher, even though they test markets, that's fine, but you need to get your land division and they're very quick. If you know that market's something worth you staying into, you need your land division there because you have to control your inventory. It's like, Amazon didn't have any control of the inventory that was coming in. How are they going to make money? They would make it sparingly. It just wouldn't be nowhere near the multi-billion-dollar company it is right now. You have to control your inventory.
Yeah. And I guess, the other thing that comes to mind is, I mean, we have such a well-oiled machine when it comes to doing entitlements. And part of that is just having good relationships with municipalities, subcontractors. I mean, I feel like that matters a lot. I mean, for them to just have to come in, build a new office, forge a relationship with all of the local regulatory authorities. I mean, you've already built a lot of those relationships. I actually had an investor call the permitting office the other day to substantiate what we're saying our marketing. And they're like, when they got back to me, they're like, oh yeah, we know Blue Onyx. And then they just kind of rattled down the list of permits that we had in place. I mean, how valuable is that to our machine here, having those relationships? Does that make it easy? Does it not even matter whether we talk to familiar faces or not?
It's crucial. You have to have great relationships because you could hire any, and that's where I went wrong. I think I started the conversation out that way. Like I hired the wrong horizontal construction team, cost me $1.5 million. If you don't have the correct relationships, you want people you can rely on. Even if they're more expensive, you already have that budgeted in, but they know, they're timely. So time saves money. So there's a lot of things there. Yeah. You save yourself, I don't know, even want to say numbers, but decades of experience, decades of headaches, decades of trouble, so by finding the right people, that's crucial. But you got to remember also companies like Fisher, they don't usually go into a market without a new market anyway, without buying out an existing company. So, for example, St. Louis, they bought Payne Homes. Oh, down in Florida, I forgot the name of the company, but Northern Florida, they just bought another company. So that's how they get into that market. They bought a company that where they already have lots in place and they just want to expand upon that. It's another way of approaching it. I kind of like their approach and they've done very well. So all respect to them on that.
Yeah. And I know that before Fisher or whichever builder that we're working with, before they bring us a potential project, they have to do their own pile of due diligence. I know we talk about 5-star school districts all the time. I mean, why do 5-star school districts dictate how high of a demand is? And like, I guess, what does Fisher Homes do as far as due diligence before they decide that they want to build in a community? And then after that, why is it still necessary for us to do our homework on a piece of land to make sure that it's profitable?
Yeah, that's a good question. So on their end, obviously they do their initial analysis, which it's usually putting it into Performa, running comps, seeing what that's going to sell for and everything else. Great. The initial Performa looks good. Then you put it through a UMR report, which is usually third-party studies. They do have a lot of in-house people that help with this as well. But they run, what is that city growing at? What kind of capacity is coming into it? What other commercial buildings or offices or different businesses are coming to that area? Or is it losing value? Or is it they moving out? So you find out a lot of that information in their initial valuation when they're running those UMR reports. And the second part of that question, you were asking, why is it important for us?
Yeah, why not just take their word for it? I mean, $1 billion company like Fisher, surely they have people smart enough to decide what's good or not. Like, why even validate their work?
Well, okay. So, I mean, you always want to validate their work because here's the thing. Like, let's say Fisher Homes is no longer in this market. Like, they run out of lots to build. They evaluated the deal. I respect that. I usually entrust a lot of their information, but we want to know on our end, are we putting our money at risk? Are we putting our investors' money at risk? What does that market look like? Can we build it ourselves? Okay, absolutely. Can we sell it ourselves? Not a problem. But you always want to evaluate every deal individually. And like, I love their reports, great information. I don't really see their in detailed reports, but I get a snapshot of kind of what they do. And, they got great people on their team. So I respect that.
Yeah. So in closing thoughts here, I think that one of the big messages is no matter how, pretty a deal looks, no matter how great the company is, always trust, but always verify. Because at the end of the day, it's like you're the one getting stuck holding the bag if bad things happen.
So that goes back to my father-in-law, Mr. Richard Schmier. He always tells me because he helped me out with a bunch of electrical work. That's his profession. He's like, Kyle, if someone tells you they turned the electric off, trust them, but verify. He's like, that could kill you. I was like, fair enough. I was like, that's your life on the line. So
Yeah. I'm never offended when someone, goes over my head and asks the next person in command or calls a city to substantiate what I'm saying. It makes me feel good. It's just like, well, they went and checked, what I'm saying is accurate. And so that's good because people can just look and smile and nod their head. But I know behind that, being amiable, you've got to make sure it's the same reason why, although we validated Fisher, like you said, like we still need to validate their work. We still need to do all of these things upstream so that if something happens to Fisher, we know these jobs are profitable. And so like the big message today was really just walking you guys through how we create the dollar, where the money's created. So again, massive amounts of equity is built into these parcels just from taking it from raw land to being approved for the development itself. And not only that, we receive profits every time we sell lots per the takedown schedule. Like you said, I mean, interest after bank interest, we're still profiting on average north of 35%. I mean, that's awesome. So yeah, I just kind of wanted to put that out there and put it top of mind for anybody that watched this all the way to the end.
Yep. Yeah, no, definitely, guys. Thanks for attending. We're on every Wednesday, same time, same place. Appreciate it, guys. Andrew, any last thoughts before we let everybody go?
No, thought that was super helpful, super useful. Dan, Kylie, always appreciate your time, and I'll see you guys next week.
Yep. Thank you to our Lord and Savior, guys. Appreciate it. And look forward to seeing you guys next week. God bless.
Awesome. Thanks, everybody.